Hey everyone, thank you for joining today's first time homebuyer webinar. I am Melissa and I will be your moderator for today's session. Before I introduce your host today, I'll just make a note that if you have any questions, please use the chat function or contact Brandon after the session and he can set up an appointment with you if you have individual needs. So our host today is Brandon Jensen. He's a loan officer here in Hillsboro, Oregon. He's been with our company for 9 years and has a wealth of knowledge to share with you in your home buying journey. So with that, I'll go ahead and pass it over to Brandon.
Hello, everybody. Brandon. Just want to go over some quick things that we're going to be learning today, as you can see on this chart here below. What is the home buying process? We're going to go into some further detail about that. What do I need to consider as I search for the right home? How do I choose the right loan? Identifying the cost, terminology related to buying home, and then finally, questions and answers. So the first, are you ready to buy a home? That's a very vague question. So it'd be interesting, is this going to be your primary residence, or will it not be your primary residence? Are you interested in a single family home, a condo? Those kind of things will help us determine. You have different things that come with either of those. Sometimes they have an HOA, which is they're taking care of your lawn and house and that kind of thing. So there's more cost involved there. So that would be something we wouldn't want to go over. What is your timeline? Are you going to be buying now, years from now? And finally, the location. Is location important to you, to where you want to live? It usually is. Schools, functionality to other places that work and that kind of thing. Being prepared. We want to understand what your budget is with you so you can start shopping for a home. We want to make sure that you're comfortable with that purchase price. We want to understand the properties, will it sell quickly, which in our markets they normally do. Multiple offers. We will discuss what can help you have a winning offer with multiple offers, and knowing the market, the homes that you want in your area. That is very key to helping us decide some of these other questions too. Are you ready to move forward? So you would be consulting with a loan officer, me, or one of other FirstTech loan officers. And the next step after that would be applying for the loan pre-approval. We want to make sure that you're approved to go out before you start shopping. And then you want to get a realtor because they're going to want to make sure that you're pre-approved also, so that they know what your budget is, where they want to take you, because all these things are very important when you're out looking for a home. They will help you with preparing the offer, and also they will help with the purchase contract and getting that over to us as the lender, and all those things we're working as a team to do together. Determining the right loan for you. There's so many loan options out there. That's probably a big question. We got to make sure it's the right one for you. Just because it's the lowest rate may not mean it's the best one. There's lots of options that are out there for you, and our job is to determine what really is best suited for you. How much you can afford is one thing. What you can afford and what you want to pay are two totally different things. So that was something that we would want to discuss also. For saving for your down payment, we need to make sure that you have enough funds for your down payment and your closing costs. So those things are two different things that we want to go over to make sure that you're prepared for that also. Loan programs. Like I said before, there's lots of loan programs. We would want to make sure that we're picking the right one that's best suited for you. We have fixed rate options. We have adjustable rate mortgage options, little or no down payment options. Combination loans are first and second mortgage. That helps you with down payment assistance possibly. And high balance loans, jumbo loans, those will get into specifics depending on the area that you would be living in. And our corporate relocation loans, if your employer is moving you to a specific area, we have special programs designed for that to help you out for that. So monthly housing cost examples, we want to determine what you can afford, what the different costs that are involved with that. So we have a very great calculator that you can use, and it will help you determine some estimates of what you think you want to spend, and also give you an idea of what the cost will be. It's a very great tool. I highly recommend that to all my clients. So some examples of closing costs here. As you can see here, this is based on a $750,000 purchase and the loan amount of $600,000. We have the various fees and costs that are associated with the loan. You see a large number down there at the bottom, but there's also things that are involved in there that we want to make sure you don't always necessarily have to have taxes and insurance included in your monthly payment. So that can maybe possibly help reduce some of these closing costs that you need to bring. There's another example of a lower purchase price amount, and you can see the difference between a $350,000 and $750,000. There's not a lot of difference in the closing costs there, so that may surprise some people. Again, that's why we want to touch base on what you can afford, what you want to buy, and where you're at there. The mortgage loan pre-qualification. So you would meet with a loan officer and me to explore calculate your loan options. We would review your income, your assets such as bank statements, 401k, IRA, some examples there. We would review your credit information to make sure that you can qualify based on your credit and with the loan programs that we have. And then also we can give you a rough idea of what the loan amount you could possibly be approved for, the loan product, payments, that kind of thing, go into more details. We provide the pre-qualification letter prior to submitting for underwriting for a pre-approval. We do those a little bit different. The pre-qualification is me or another loan officer verifying that information, saying, yes, this information looks good, and you can go out and start looking and shopping for homes. Getting a pre-approval is one step further, where we send it into our underwriting team, and they review all those things and make sure that you are fully pre-approved, and that's really the best that you can get when shopping for a home. So the mortgage loan pre-approval, most listing agents, again, sellers agents, they want to see proof that you have that to get your offer accepted. Where we stand out, we do that pre-approval, and that really helps secure more offers accepted than maybe some other lenders, because we are actually getting you fully pre-approved. Again, like I touched on before, we send it in to verify this information, income and asset documentation, and the underwriter gives us the formal pre-approval. And then we would submit that in when you are submitting your offer for the home. So once you submit that offer and now it gets accepted, which is our hope and our case that we get that done for you, an escrow account is open, which is where you would deposit some earnest money to secure your home, interest in the home. Then you would notify us as a lender, giving us the purchase contract. Then that moves us to the next step to get getting the ball rolling for getting your loan closed. You will schedule an inspection to make sure that the home is structurally sound, there's nothing deficient there. And then after that point, this is where if anything did come up wrong, you would negotiate repairs with the seller. After you send that in, the realtor will send it in for the addendums, which is corrections or adjustments made to that purchase contract, whether there was repairs or something like that. And then removing contingencies. Contingencies are basically safeguards for you as the buyer if something comes up. So when we talked about that home inspection, if something comes up that is ineffective or deficient with you that you don't like, that is your chance to walk away from that transaction and still get your earnest money back. So there's something wrong with the roof or structurally sound with that home. Some of the upfront costs that are due with the home buying process prior to closing is your earnest money, which is, again, you securing your interest in that property. We would you get the inspection, which is them doing structural inspections of the home. And then you get an appraisal, and the appraiser's job is to go out and do something a little bit different than the inspector. And they are making sure that the value that you're paying for that home is justified. That is their core job, to make sure that what you're paying for that home is correct. And an HOA, which is the Homeowners Association certification, is we will reach out to that company that handles the HOA to make sure that all the paperwork with them is taken care of and handled, and there's no problems with that. Before you get your keys to your house, we will confirm that you have homeowners insurance selected, which is your choice. We will confirm all the closing disclosures, which is all the documents, all the numbers that we talked about prior that are all accurate, and you will get those documents sent to the title company, and they will help you with the loan signing, the process, to make sure all the documents are signed correctly. After those are all signed and done correctly, we will then fund your loan, and title will record with the county, and that will then make you the official owner of the home. And then after that time, whatever the time is set for that, your realtor will get your keys, and you guys are the official homeowners of that house now. At FirstTech, we try to make it as easy as possible with you doing an online application process. We have a dedicated loan officer like myself from start to finish with any problems that might arise. We have a variety of different unique loan programs to help you fit the best loan program for your specific need. We have quick closings available if need be. In our current market, that is something that's very popular and needed in most cases, so we can help you with that too. And we typically retain the servicing of your loan, which is very important. If you have any problems, concerns, questions with your loan, you're talking to somebody that works directly with FirstTech versus other places that do not retain the servicing. You may be dealing with somebody that's not even with the company that you did your mortgage loan with. Here's a list of common terms that you might hear during the transaction. So this would maybe be a good shot, an idea to take a screenshot of this. We have a short sale, foreclosure, an escrow, title insurance, PMI or private mortgage insurance, impound and escrow account, and disclosures. So now would be a good time if you want to take a screenshot of that, if some more common terms you might have. Questions and answers. We'll take some questions, and I can provide some answers with you if you have any of those at this time. Thank you.
Okay, first question for you. What do you think would be a benefit of owning versus renting?
Owning versus renting, I feel like, right now, renting, you might be paying the same price as what you'd be paying a mortgage for. So right now, if you're renting, you would be paying for somebody else's mortgage and not having any ownership in your own. So you may be surprised that you could own for what you're paying for rent, and that way you're having, you're building your own equity in the future for yourself.
Do you think it's always necessary to have 20% down? And if you don't, do you always have to pay mortgage insurance?
It's not always necessary to put 20% down. That is the one way to avoid having mortgage insurance. But sometimes having mortgage insurance is a good option because you're not always depleting the cash that you have, because you may be saving all this money and then you buy this house and you have nothing left for repairs or something emergency comes up. So sometimes there's benefits for having mortgage insurance versus not having mortgage insurance.
All right, and last question for you. What's the big difference between pre-qualified and pre-approved?
The difference between pre-qualified and pre-approved is pre-qualification, we're doing a credit application, we're getting income and asset documentation, and me as a loan officer are verifying that information, and I'm saying based on that review that you are pre-qualified to go out to buy a home based on the information provided. And pre-approval is doing all those same steps, but we send it into our underwriter. They do a full manual review and making sure that we are 100% have no problems with being able to approve your loan, and that's really the best thing to get.
All right, well, that was the last question for you. So if you want to move to the last slide, I would suggest taking down Brandon's information here. If you have a need for more specific information or you want to set up a meeting to get this process started, Brandon will be happy to meet with you. Right, if there's no further comments from me, Brandon, then I think we're good.
All right, thank you.